Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. Today, I would like to present about our discussion for task comprehensive case 1 that the title is Interim Financial Reporting. So, here the group members of group 5 for the first one is Nur Fatihin Irfan bin Muhammad Nur Fadli. The matrix number is 272979. And the second one is Muhammad Danial Rifqi bin Osman, which is me, 272995. And the next one is Ng Wen Kwan. The number metric is 272998. And the last one is Nurshasha Shazwani binti Badaruddin. The matrix number is 273156. Alright, so here we go to the summary of MFRS 134. Alright. What is the MFRS 134? There must be published the MFRS 134 standard, which is interim financial reporting in November 2011. The interim financial reporting is based on an interim period where the interim period is a shorter financial period as compared to the overall financial period. And the report is a report that contains the complete financial statements of each entity, and the financial statement must follow an interim period where the period is less than a full financial year. So, the next one is according to the MFRS 101, presentation of financial statements, it has stated the contents of the complete financial statements. The aim of the MFRS 134 is to guide the content required in the interim financial statement. And then, this standard also not specified which companies must provide interim financial report, how often they must be issued, or how long after the interim period has ended, and also will be applied by entities for which the entity has been required, or the entity itself elects to implement the standard, the provision of MFRS. The last one is the public listed companies are recommended to establish interim financial reports at least before the end of the first half of their fiscal year, and make them available 60 days after the intermediate period has ended. Alright, so we go to the development or formulation of MFRS 134. So, for the first one is normative theory. What is the normative theories? Is the accounting theory advises policymakers based on theoretical principle which begins with theory and leads to concrete policies, and the normative approach is more analytic. So, the materiality must be examined in respect to the intermediate period financial data as stated in paragraph 23 of MFRS 134 when choosing or report an element for interim financial reporting. The second one is the positive theories, is a theory that employs a practical method to look at situations that arise in the business and based on cold statistics difficult to apply. So, according to the paragraph 15b of MFRS 134, a list of transactions would necessitate reporting if they were significant. So, the last one is the regulation theories, which the regulatory approach theory accounting standard setting is a highly political process. According to the MFRS 134, the company's financial accounting rules must be the same as those used in the yearly financial statement. However, it is excused if an accounting policy change occurs after the date of the most recent annual financial statement and be reported in the following year annual financial statement. Okay, so we go to the third one. Main parties. Who are the main parties that involved in the development or formulation of MFRS 134? So, the MASB or Malaysian Accounting Standard Board is one of the primary stakeholders engaged in the development of formulation of MFRS 134. MIA and also MAPA Standards 13 duty were delegated to must be in 1997. The purpose of the Malaysian Accounting Standard Board, which is must be as stated in the mission statement, is to develop and promote high quality of accounting and reporting standard that are compatible with international best practices for the benefit of users, preparers, auditors, and the general public. The next stage is to directly contribute to the international development of financial reporting, which will benefit users, preparers, and auditors of financial report. And also, must be created a working group that is responsible for various projects. Each working group is responsible for reviewing and also conducting in-depth analysis of assigned project, taking into consideration any statutory and regulatory reporting obligation as well as the project's practical consequences. A project manager, representative from the accounting profession, commerce, academics, and regulatory bodies must all the members of a working group chaired by a members of the must be. Okay, so we go to the verification of MFRS 134. There are three bases that we can discuss in this topic, which is the first one is dogmatic basis. Dogmatic basis is when we believe what we read and other people's remarks simply because they are issued by an authority. We also accept the comments made by those in positions of authority on this premise and the flaws of in this foundation that rely solely on human opinion rather than evidence. The next one is the self-evident basis, which means that the reasonableness of a statement based on our general knowledge, experience, and also observation. The argument for using self-evidence to evaluate the truth was the statements based on our general knowledge and also need to prove and more explanation about it. The last one is this foundation flaw is only unworkable for one person, not for another. And the last one is the scientific basis, which means that the established through testing, investigation, and experimentation, among other methods, but are backed up by empirical evidence. Synthetic and inductive are the two types of scientific basis. The disadvantage of this basis is that it takes longer and costs more because research and trials are required. So these are the three explanation about the three bases and also the differences about it. So we go to the next one is the nature of the MFRS 134 or the interim financial reporting. MFRS 134 is principles based because it includes fewer rules and requires more reference to accounting framework following the conceptual framework. MFRS 134 also focuses on high professional judgment and there is less complexity, exceptions, as well as verbatimness. For the second one is MFRS 134 also is a principle based because it is based on broad guidelines and the guidelines can be used to facilitate the subjective judgment and interpretation of principle. Principles act as a guidance in a variety of circumstances and also situation and it do not impose strict rules that are mandatory for reporting entities to follow. And it is also requires more discretion from the managers and practitioners in preparing the financial statements because it is a principle-based accounting framework. And then MFRS 134 also doesn't include numerical regulation and standard in detail, but only include description that act as broad accounting guidance. In the preparation of the financial statement, the accountants will make professional judgments based on their discretion and follow the broad guidelines set by MFRS 134. Alright, so we go to the limitation of MFRS 134 that have by each entity. The For the first one is the materiality that item in assessed and recognized based on interim measurement. As a result, the measurements are greatly based on the estimates rather than the annual financial measurement of the data. MFRS 101 stipulates the reporting entities to separately disclose material items such as discontinued operations, while MFRS 108 requires entities to disclose changes in accounting policies, estimates, and errors. Unfortunately, these two standards do not provide qualified guidance related to the materiality. The second one for the limitation of MFRS 134, since the recognition and disclosure decision are based on interim information for that period, it requires discretion and professional judgment of the accountants. The entities may allow the application of two different the same financial year to reflect that accounting changes happen during the interim period. It will lead to ambiguous operating results, difficult interim allocation, and complexity in analyzing and understanding information for interim period. So, after we have discussed about the limitation, we also discuss about our suggestion to overcome this limitation of MFRS 134. For the first one is the adapting financial periods to operating cycles. So, in this part, accounting issues can be mitigated by having a close date that aligns with a low interest period of business natural working cycles. In this one, businesses that deal with many enterprise cycles at the different times of the year might emphasize the relevance of duration statements by reporting on seasonal cycles rather than calendar years. And um, the second one is the using income smoothing reduce fluctuation. Accrual of anticipated fees for the entire year rather than recognizing them as they occur is one of accounting strategy for smoothing our interim gains. And the last one is the allocate annual cost to interim period based on sales. When annual costs are allotted to interim intervals based on periods part of overall annual income, reported profit have propensity to vary with sales. So that's all from us. Thank you and assalamualaikum warahmatullahi taala wabarakatuh.